Hey there, savvy investors of Singapore. Welcome back to Investing Iguana, where we dive deep into the sea of stocks to bring you the pearls of investment wisdom. Today, we're zooming in on a hot topic, Seatrium Ltd, a company that's been stirring up some serious waves in the offshore and marine industry. CIMB has set a target price of 19 cents for Seatrium on January 4, 2024, and recommends an add. But the big question is, should you follow suit? In this video, I'll break down CIMB's analysis and take you through the highs and lows of Seatrium Ltd's journey, giving you the insight you need to decide if it's time to add this stock to your portfolio. Is Seatrium Ltd really set for a rebound, or is this optimism just a drop in the ocean? Let's find out. Cancellation of the Empire Wind 2 project. Equinor and BP, in a surprising move, have terminated their agreement with NYSERDA for the Empire Wind 2 project in the U.S. This offshore wind farm substation, with a potential capacity of 1,260 megawatts, has been a subject of discussion due to macroeconomic conditions like heightened inflation, increased interest costs, and supply chain disruptions, partly due to the COVID-19 pandemic and the Russia-Ukraine conflict. Seatrium, STM, tasked with building this substation with a contract worth over 250 million Singapore dollars, also announced the project's cancellation. The background story. In May 2023, a significant event took place in the renewable energy sector. STM, a company in this field, was awarded the responsibility of two offshore wind farm substation platforms. These platforms, known as Empire Wind 1 and Empire Wind 2, were seen as a major step forward in harnessing wind energy. However, a few months later in October, a decision by the New York Public Service Commission had a profound impact on this project. The Commission decided not to adjust the power purchase agreement prices. This decision meant that the prices would remain the same and would not take into account the rising inflation and supply chain issues that were prevalent at the time. This decision had an unexpected consequence. It led to the cancellation of the Empire Wind 1 and 2 projects. At the time of the decision, the full impact of this cancellation was not entirely anticipated. It was only later that the magnitude of this decision and its implications on the renewable energy sector became apparent. This serves as a reminder of the complex interplay between economic factors and the advancement of renewable energy projects. Current status and financial impact. The Empire Wind 2, EW2, project, a significant initiative in the renewable energy sector, was originally scheduled to commence in June 2024. However, as of now, only a minimal amount of work has been completed on this project. STM, the company overseeing this project, has decided to shift its resources and focus from the EW2 project to other projects that are currently in the pipeline. This strategic reallocation of resources is aimed at optimizing the company's operations and ensuring the successful execution of its other projects. One of the key aspects of STM's operations is its structured progressive payment milestones. This system ensures that STM receives payment for the work it has performed at various stages of a project. As a result of this system, STM has already received payment for the work done on the EW2 project so far. This has helped maintain a neutral cash flow for the project, ensuring that the company's financial health is not adversely affected by the project's current status. However, despite these measures, we estimate that there will be a reduction in STM's earnings before interest and taxes, EBIT, for the fiscal years 2024 to 2026. This reduction is estimated to be between 20 million Singapore dollars to 30 million Singapore dollars, which is a considerable figure. This projected decrease in EBIT highlights the financial impact of the changes in the EW2 project on STM's overall financial performance. Empire Wind 1 progress and impact on STM's order book. Despite the setback with the Empire Wind 2, EW2, project, there are still positive developments to look forward to. For instance, work on the Empire Wind 1, EW1, project, which is due for delivery in 2026, is already about 10 to 15% complete. This progress indicates that the project is moving forward as planned, which is a positive sign for STM and its stakeholders. In addition to EW1, STM is also actively involved in other offshore projects. One of these is Ørsted's Greater Changhua 2B and 4 offshore wind farms located in Taiwan. These projects are set for delivery in 2025, indicating that STM has a busy schedule ahead with multiple projects in the pipeline. However, it's important to note that the cancellation of the EW2 project does have some financial implications for STM. Specifically, EW2 represents about 1.5% of STM's substantial order book, which is valued at 18.3 billion Singapore dollars. While this might not seem like a major portion, it's expected to have some influence on STM's share price. But there's no need to worry. Despite this setback, we remain optimistic about STM's prospects. We anticipate around 7 billion Singapore dollars in new orders for STM in 2024. This includes potential awards from major companies like Petrobras and TenneT. These new orders would not only help offset the impact of the EW2 cancellation but also contribute to STM's growth and success in the renewable energy sector. Therefore, while the cancellation of EW2 is unfortunate, STM's future still looks promising. Looking forward, there are several key developments currently taking place that could significantly impact STM's future. One of these is the ongoing communication with investors regarding the post-merger cost savings between SimCorp Marine and Keppel Offshore and AMP Marine. This merger is a significant event in the industry, and the potential cost savings resulting from it are being closely watched by analysts. These savings could serve as key catalysts for STM, potentially boosting its financial performance and market position. In addition to the merger, there are other potential positives on the horizon for STM. For instance, the company is in the process of securing 1 or 2 jackup rig orders from national oil companies, NOCs. If successful, these orders could significantly enhance STM's portfolio and revenue. Furthermore, STM is aiming to achieve profitability by the fiscal year 2024. Achieving this goal would represent a major milestone for the company, demonstrating its financial stability and growth potential. However, while these developments are promising, it's important to also be aware of potential risks. For instance, further order cancellations could disrupt STM's operations and financial projections. Similarly, project cost overruns could negatively impact the company's profitability and overall financial health. CIMB take on STM. The financial analysts at CIMB, a well-known banking group, have recently reiterated their add rating for STM. This rating is a recommendation to investors, suggesting that they should consider adding STM stocks to their portfolio. The add rating is often given to stocks that are expected to outperform the market or their sector in the near future. STM holds a unique position in the ASEAN market as the sole offshore and marine proxy. This means that it is the only company in the region that provides a direct investment opportunity in the offshore and marine sector. This unique positioning, coupled with a robust order book, places STM in a strong market position. The term order book refers to the list of orders that STM has received for its services. A robust order book indicates that STM has a steady stream of work lined up, which is a positive sign for the company's future revenue and profitability. Furthermore, STM is on a path towards profitability. This means that the company is implementing strategies and measures to increase its revenues and decrease its costs, with the goal of generating a profit in the near future. Achieving profitability is a key milestone for any company, as it indicates financial stability and growth potential. CIMB's target price for STM remains at 19 cents. The target price is an estimate of a stock's future price, based on an analysis of the company's fundamentals and market conditions. The fact that this target price aligns with STM's 7-year average valuation suggests that the company's stock is currently valued fairly, based on its historical performance. Iggy, the Investing Iguanas Take on Seatrium. First up, let's talk about the cancellation of the Empire Wind 2 project. This was a big deal, a contract value of over 250 million Singapore dollars gone with the wind, literally. But, in the grand scheme of things, this represents just about 1.5% of Seatrium's 18.3 billion Singapore dollar order book. While it's a setback, it's not a shipwreck. The company's quick response, reallocating resources to other projects, shows agility and resilience. The financial impact? We're looking at a reduction in EBIT of around $20M-30M over the next few years. Not ideal, but not disastrous either, especially considering Seatrium's substantial order book and the progressive payment structure that has cushioned the cash flow blow. Now, let's set our sights on the future. CIMB's target price of 19 cents signals confidence. It's based on Seatrium being the only offshore and marine proxy in ASEAN with a substantial order book and a trajectory towards profitability. This optimism hinges on a few factors. First, the backlog of loss-making legacy projects is expected to be cleared by the first half of 2024. This cleanup is key to steering the company back into profitable waters. Looking ahead, there's a promising pipeline of projects, including Ørsted's Greater Changhua and Taiwanese wind farms. Plus, Seatrium is expected to win around 7 billion Singapore dollars in new orders for 2024, which could include lucrative contracts from Petrobras and TenneT. These wins could provide a significant boost, reaffirming Seatrium's stronghold in the industry. The offshore and marine industry is notoriously cyclical, and Seatrium's journey is no different. While the path to profitability might have a few more waves to ride, the company's sizable order book and strategic moves position it well for a potential rebound in 2024. And there you have it, folks, a comprehensive look at Seatrium Ltd through the lens of CIMB Analysis. We've navigated through the rough waters of their market challenges and explored the potential that lies ahead with a target price of 19 cents. Now, it's over to you. Do you think Seatrium Ltd is a golden opportunity waiting to be seized, or are you still on the fence? Share your thoughts in the comments below. Let's get the conversation going. If you found this video informative and want to stay updated with more insights and investment strategies, don't forget to hit that like button and subscribe to Investing Iguana. Join our community of smart investors, and let's navigate the exciting world of investing together. Until next time, keep your investments smart and your returns high.